Good evening, and thank you for joining us for tonight's home buying webinar. My name is Jaime Donias from Valley Strong Credit Union, and I'm joined by Craig McMahon from McMahon Real Estate and Valley Strong Home Loan Center Manager and Senior Underwriter, Robin Potter. Before we begin, I'd like to cover one housekeeping item. Depending on time, we plan to answer a few questions from the audience. To submit a question, please click on the Q&A button at the bottom of your screen. We will answer as many questions as we can live. If you feel your question has not been answered through the presentation, please fill out the survey after the webinar and supply your contact information. Someone will reach out to you directly to answer your question. We have a jam-packed agenda tonight, so I'm turning my video off now so we can focus on the presentation, and I will begin by introducing our speakers. Robin has been with Valley Strong Credit Union for 5 years in the Home Loan Center, where she serves as a home loan center manager and senior underwriter. Robin is a true expert in the field, having been in real estate lending for the last 44 years. Originally from Anaheim, California, Robin has lived in Bakersfield for the last 37 years. She and her husband have 6 children and 8 grandchildren. Craig is celebrating his 27th year in real estate business this year. He comes from a family of real estate professionals. His father has been a real estate broker for the last 45 years, and his mother was a certified escrow officer for 33 years prior to retiring. Craig purchased his first investment property at the age of 18 and got his real estate license shortly after it closed escrow. Craig is very involved in the local community and is proud to call Bakersfield home. He and his wife both grew in Bakersfield and attended local schools. They have 6 amazing children that keep them very busy. All right, let's get right to it. Robin and Craig, please take it away.
And hi, everybody. Welcome to our webinar tonight. I am Robin Potter from Valley Strong Credit Union, and we're joined by my partner, Craig McMahon of McMahon Real Estate, which you just heard about. Happy to have you with us.
Yeah, so much. Thank you.
There you go, Craig.
Oh, sorry.
Oh, there you are. So wanted to welcome you all here. And just so you know, we are Valley Strong Credit Union. Previously, we were Current Schools Federal Credit Union. We are still the same credit union, still very much involved in this community, and the same DNA as we've always had. One of the things that I felt was really important tonight that we wanted to talk to you about, because it's very topical, and I'm going to actually have Craig talk about this, is the updates that he has in the real estate industry regarding COVID-19. There are so many restrictions that are out there, but my question to him was, how safe is it? How safe is it to go out and look at homes? Everybody's concerned about their family, their health, and should be. So Craig, do you want to go ahead and talk about that for just a minute?
Sure. The state of California, the California Association of Realtors and Department of Real Estate have put forth some extremely strict guidelines that all the real estate professionals must follow when making appointments to go look at homes, to have people even enter your home. There's paperwork that has to be signed and disclosure that the home buyers will follow all the state guidelines, which include the obvious of wearing a mask, hand washing, hand sanitizer, and then not touching surfaces in the home. Most of the houses that we go and make appointments to go look at during this time with what we're all going through, the lights are left on. So there's very minimal amount, if any, as far as having to touching the surfaces in the homes. But then at the same time, the buyers are protected because the sellers must also sign paperwork where the properties have to be disinfected in between showings and clean. So not only are we looking out for the sellers, but the buyers and ourselves as real estate professionals as well, so we can get through this time. But again, it's a lot more work just to go look at properties with the required paperwork now to meet the COVID-19 guidelines. But we're all going through the same thing and want to protect each other.
Good, great. Thank you very much for talking about that. I appreciate it. Next slide. So this is just going to be a brief rundown of what our goals and objectives are for tonight. Obviously, you're here because you're thinking about buying a home. we're going to talk about, why should I buy instead of renting? Well, part of that is buying a home is the largest financial asset most people have in their lifetime. And it's because you build equity, meaning that the value is increasing in your home. You have better tax deductible benefits. But then the next question is, how do I start? And this is part of what we want to talk about tonight. It's really, really important that when you're starting out, you want to make sure that you have the ability to complete your transaction. And that comes from a pre-approval with Valley Strong Credit Union. I'm going to talk about the difference between what's a pre-approval versus a pre-qualification. They sound the same and they're used interchangeably, but what are those differences? How do I go about being pre-approved? What's involved? How do I find the right realtor? And what does a realtor really do for me? Then once you have that realtor and you're already pre-approved and you're ready to find a new home, what are the things that you're going to talk to your realtor about when you're looking to buy a new home or you're looking to find your home? The next part of that is what happens when you're making an offer to purchase. Then we'll talk a little bit about what the process looks like and then walk you through closing escrow and what that's about and what that means. Next slide. All right, so pre-approval versus pre-qualification. Next slide. A pre-approval is actually a formal application. It's where you're going to meet with a Valley Strong mortgage loan officer. And at that time, they're going to take a full application, which means that they're going to get all of your information. They're going to check your credit. They're going to look at your income and your assets. They're going to review down payment options with you. But one of the most important things that they're going to talk to you about is what payment really fits in your budget. Because in the beginning, you can be out on the webinar or on the web and you can be looking at all kinds of houses and you see this really wonderful house and that's the one I want. But what you're unclear of is you don't know about how much is it going to cost monthly. What is my monthly housing payment going to be? How much is it going to cost for closing costs? How much can I put down? And what all of that looks like. What is the best kind of loan for me? That's what that pre-approval process is going to ensure for you, is that you understand by the time that you are meeting with your realtor, that you have the ability to go out and look for a home and be able to make an offer. So through this process, your loan officer is going to, just like I said before, they're going to check your credit. They're going to look at what your income is. Proof of income is different for different people, meaning that if you're a wage earner, we'll be looking for 30 days worth of pay stubs, your last 2 years W-2s. If you're self-employed, we're going to be looking for your last 2 years federal tax returns. Then we're also going to want to see what your assets are. And that usually happens by providing your last 2 months bank statements. When we're talking about down payment options, and we're going to get into that just in a little bit here about what that looks like, what we're doing is helping draw a roadmap for you so that you understand and you have the best vision of what you're walking into. At the end of this pre-approval, Valley Strong loan officer is going to then give you a letter that's really a formal commitment stating that how much you can borrow, what your terms are, and that we're prepared to make a home loan for you.
Can I add to that, Robin?
Sure.
To the pre-approval, everyone that's part of this webinar, put a great big star on your notepad. This pre-approval is everything. Probably the most important thing we're going to talk about tonight is obtaining this pre-approval letter. I get offers every single week on listings that I have on the market for sale from other real estate agents and brokers in town and out of the area as well. A lot of them come from, the Bay Area and Southern California. But everyone's heard the term, and Robin will get to this with the pre-qualification letter. And the pre-qual letter is not worth the paper it's written on. And this approval letter, where the verifications have all been done, is basically a written guarantee that you can buy this home. You can purchase the home at the price of the offer that's been made. And that is huge. I mean, everybody knows and has heard the horror stories of all of the multiple offers that are out there. I've got 3 or 4 listings in the last couple of weeks that had 11, 12, 14 offers on one property in the first day or two that it's on the market for sale. And these pre-approval letters are what are going to make you successful in your home search. You definitely want that. A lot of lenders will just take the app over the phone and send you out the door to find a house, and you don't have a chance in getting your offer accepted with the pre-qual over someone that has a pre-approval. So I just wanted to add that. It's very, very important that be in place to help people be successful in this market. It's very, very competitive out there right now, and the pre-approval letters are paramount.
Great, good deal. Thank you. Next slide, please. So now I'm going to talk about that pre-qualify. What does that mean? Pre-qualification. Pardon me. You hear about it all the time. And basically what it is it entails a phone call. Maybe you're seeing ads on the internet, you're seeing something on TV, give us a call, we'll get you pre-qualified. Basically all they're doing is they're just taking your statements that you're making. Well, I make, $50,000 a month, and I have 800 credit score, and I have $100,000 in the bank, and they go, okay, you're pre-approved. And they don't check your credit. They haven't verified your income. They haven't verified your assets, and they really don't even go over loan terms with you. So it's a really, really rough estimate of your ability to be able to complete the offer to purchase. And just circling back to what Craig said, when we send you with a pre-approval letter, we're telling all of those realtors who are on those homes that you're making that offer that you're a bona fide purchaser, that you are ready to complete a transaction with them. Next slide. Okay, so when you're at this pre-approval and you're meeting with your mortgage loan officer, what should you expect? So it was kind of like I was just talking about before, and I want to keep reiterating this. You want to bring proof of your income for the last 2 years. You know what, and I'm going to back up here just a second. The pre-approval process itself is no cost. If anybody in a pre-approval process asks you for money, go somewhere else. There should never be any cost involved with this. So what can you expect? And how long does all of this take? Well, it depends on how prepared you are when you have that meeting with the mortgage loan officer. So you want to bring your proof of income, just like I was talking about before, your pay stubs, W-2s, tax returns. And if you're retired, you want to bring your most recent retirement statements. Sometimes you may not have your retirement statements. So if your income is being automatically deposited to your bank account, you can just bring that in and we can accept that as proof of that income. You want to bring your last 2 months of bank statements showing where your money for closing costs and down payment will come from. Pardon me. We will, during this process, we will check your credit. We're going to establish what your FICO score is. And I know you hear that all the time. It's everywhere. And basically what we do in this process is we check your credit against the big 3 credit bureaus. We use TransUnion, Equifax, and Experian. Each one of those bureaus has their own scoring model, and they give a representative score. So you actually have 3 scores. Your representative score is the middle of the 3 scores. That then becomes your FICO score for the application. Another thing that's going to, you'll talk to your mortgage loan officer about what your down payment options are. You're going to talk about, and this is actually going to be one of the very first questions that they ask you, what payment really fits in your budget? I've been making loans for a long time, met with many, many people, and I can't tell you how many times over the years people come and sit down in front of me, they go, tell me what I'm qualified for. Mm-hmm. My response back is, I need you to tell me what you're qualified for. Only you know what's going to fit in your budget. And what's important is you want to have somebody that's working with you that is not going to extend you beyond that. It's very, very important. And once you establish what does fit in your budget, then that will give you an idea. We kind of work into it backwards. What sales price equates to that housing payment that we're putting together for you. We're also going to talk about all the different types of loan programs. We have conventional financing, we have FHA, we have VA, we offer down payment assistance programs. We have loans for specific to just purchasing investment or rental properties as far as that goes. So we'll talk about all of that. And then one of the other things that your loan officer is going to go through once you've established what your down payment is, your closing cost, what the whole picture looks like, what that payment is going to look like. And when I talk about payment, we're going to look at what the loan payment itself is. We call that principal and interest. Then we're also going to include your property taxes and your homeowner's insurance. And then if there's any mortgage insurance, which is actually, you hear it called PMI, MIP, VA funding fee. Basically what that is a foreclosure insurance. It's based on how much you're borrowing against the lower of the sales price or the appraised value of the property. And if you're putting down less than 20% of the sales price, then you are subject to foreclosure insurance. And basically what that is it's all risk-based. And what it does is, because it's a higher risk loan, because you're putting less money down, if you go into default or the home goes into foreclosure, that insurance pays off us as the lender. After a period of time, on most loans, not all of them, that mortgage insurance will go away once your balance owing equals 80% of the value of the property. At that time, and you've probably heard this, at that time, once you're establishing all of that, your loan officer is going to check your debt to income ratio. You hear it called DTI. Anyway, basically what that means is it's just math. And what we're calculating is we look at all of your credit that is showing on your credit report. Basically what your credit report is going to show us is what installment loans do you have, auto loans, personal loans, student loans. That's one thing I want to talk about is student loans, where you say, well, you can't count that against me because, you can't count that in my debt to income ratio because it's in deferment and I'm not making a payment on it. Well, we all have regulations, and our regulators tell us in our guidelines that even if your student loan is in deferment, we still have to count 1% of the outstanding balance in your debt to income ratio. We're also going to look at your new projected housing payment. We're going to look at that principal and interest, the taxes, the insurance. We're going to add all your other bills that are on your credit report. And that amount cannot exceed 50% of your gross income, meaning your income before taxes. Now, that's with a wage earner. When you're self-employed, we're going to look at what you tell the IRS you make. And what that means is that's the net amount that you make. It's after all of your expenses. We are not going to look at your gross income for the year. So once all of that happens, you actually receive that pre-approval commitment from Valley Strong. Next. Okay, so this is a really great time. If anybody has any questions, Craig and I would love to hear from you. And Jaime, do you have any questions on tap for us?
Thank you, Robin, very much for that useful information. Yes, we have quite a few questions, and let's just get right to it. First one, does it impact my credit score if I get pre-approved?
No, it shouldn't impact your credit score at all. Usually mortgage shopping has very little impact on your credit score. We see that a lot. I have a lot of people say, and they're afraid, I don't want my score to go down. And basically, I'm going to back up just a little bit and kind of get in the weeds on this. The way your credit score affects your application is in cost. It's in closing cost. And so if you have a particularly low credit score, then you're going to have more cost involved with your loan. If you have a higher credit score, you have less cost. It doesn't really affect your rate. It just affects the cost of the loan. And you'll hear that often referred to as discount points. And that's based on the different attributes of the loan. typically what is going to affect your credit score is if you're out shopping for other type of things, which would be cars or credit cards, things like that.
Okay. Second question, how long does a pre-approval last, and does it ever expire, or once I'm approved, is it good until I find a good home?
Okay, so, and thank you, that's a really good question. So the pre-approval itself is actually good for 90 days. And the reason, again, I'm going to probably just bring this up a few times, regulations, guidelines, things like that. It is determined within our industry, and this is for all lenders everywhere, that we need to be checking your credit after a 90-day period of time. If you've been out looking for a house and we have checked your credit, but in the meantime, when you're getting ready to, so maybe 3 months goes by, you finally find this house, but oops, in the meantime, I had to get a new car and I have a $600 car payment. We need to check your credit again because that 90-day period has passed, to make sure that your debt to income ratio still fits within the guidelines.
Okay. I've heard of manual underwriting. Could you go more into detail about the process or the steps involved versus a credit check?
Well, okay, that was a good question, and I'm going to break that up just a little bit. Manual underwriting actually is a form of underwriting your loan. All lenders everywhere use what they call an automated underwriting system. So they input your application into this automated underwriting system, and the findings come back and they say that you're approved or you're referred, or maybe there's some caution that needs to be there. Maybe there are some weaknesses in the application that need to be addressed. Manual underwriting happens if you don't fit in that approval area. But there are certain criteria. So there needs to be other compensating factors that, pardon me, that would make your loan application stronger that may not be obvious to that automated underwriting system. It could be that you have a low debt to income ratio, that you have more disposable income based on your lifestyle. It could be a variety of things. However, I do want to, the original question was manual underwriting versus a credit check. Manual underwriting does include a credit check.
Okay, we received a few of the same question, and they want to know how accurate is the FICO score on these apps that you can find either from a financial institution or from Visa cards?
They vary. To be quite honest with you, they vary. There are different types of scoring, and for mortgages, they have a little bit different criteria than there is for the apps. I know that on my credit card statements, it says check your score, and and I meet with people all of the time, or they're having those those scoring applications that, pardon me, that indicate this is what your score looks like right now. They do not use the same scoring models or the same criteria that you get in mortgage financing, as far as that goes.
Okay. What is the recommended amount to have in the account for closing costs?
The recommended amount would be, well, certainly it needs to be at least the amount of the closing costs. I think maybe you're asking, should I have more? Sometimes there is, these are great questions, by the way. Thank you very much. I really appreciate it. Sometimes to strengthen an application that might have some weaknesses in it, we're going to look for what we call reserves or savings, money left over after you close. So you have all of your down payment, you have all of your closing costs. It's the extra money that you have in your account that actually helps build your profile.
Okay. We have someone who says, we were pre-approved before the shutdowns. Our letter has now expired. What can we do?
All you need to do is contact your loan officer. And if it has been a 90-day period, all they're going to do is just update your credit. They're going to ask you a few questions. Has your income been impacted by, is your work situation still the same as it was when we met 3 months ago or 4 months ago, 5 months ago? Those are the kind of questions that you want them to ask, because maybe you do have shorter hours, or maybe you have more hours based on the type of job that you have. So what we want to do is have a real true picture of where you are today. So we'll recheck your credit, we'll look at your income, we'll look at your assets and make sure that nothing has changed, and reissue that pre-approval letter for you.
Okay, and then lastly, people want to know what kind of loan programs does Valley Strong offer?
Stated a little bit earlier before, and one of the things I'd like for you to do is I really want to encourage you to reach out to Valley Strong Home Loan Center and have a conversation with our loan officers, because I can kind of talk about it. I could actually talk for hours about it, and you guys don't want to hear about this stuff for hours. So we do offer conventional loans. We go up to 95% financing, meaning 5% down. We offer FHA loans. You need 3.5% down. We offer VA financing, where there's actually no money down. It's 100% financing. We do have down payment assistance programs, but I do want to talk to you about that here. Right now, because of the pandemic, I want you to understand that those funds that come from that are funding those down payment assistance programs, and there's a variety of them, those funds right now are on hold, because those funds are being allocated by the state and by the counties and by the different entities that are furnishing them, because typically they're grants or they're a special type of loan that's made to you. Those funds right now are all being allocated to other resources for COVID-19. So it's very topical for us right now. But let's see, and then we have, like I said, we have some niche products. We have investment only products where we have great programs that are low cost, low rates for people to buy investment properties. We can do 1 to 4 units. And so, like I said, I'm going for a long time, but that's just kind of an overview of what we do have.
Okay, and then kind of just piggybacking on that, I'm looking at a question now. Question is, well, it's a comment and a question. I am a veteran. Is it worth using the benefit for home loans?
Of course. Actually, your home loan benefit is one of your benefits. Your veterans benefits offer you a lot of options. I know there's education benefits. What your benefit for buying a home does is it allows you to go into a purchase transaction with no money down. And in some cases, you can, if you negotiate, and this is something that Craig's going to talk about here in a little bit, is it's all about in the negotiation. The VA, the Veterans Administration, wants everybody to take care of our veterans, and we want to as well. And so the VA says, if everybody pays for everything for our veteran, that's what we want. So there really are some great benefits to that program.
With a VA transaction, there's fees that the veteran's not allowed to pay. Where in a normal transaction, the fees are split or
Right.
can go one way or the other. But with VA, it's required that the seller pay all of the escrow fee, which is normally split. In addition to that, it includes the seller must provide a clear termite inspection. That is also not a normal item in any of the financing that we do. So there are definitely perks to the VA program.
Okay, so we have tons of more questions, but let's get back to the presentation. So thank you, everyone. We'll continue to go through the questions, and we'll answer some more towards the end of the presentation. So let's proceed, please.
All right. Thank you, Jaime. Next. Okay, so we're kind of reaching that point where I've talked a little bit about financing. You know what it takes to get a pre-approval. You know what's involved in that process. And so now it's time. I need to go out and find that realtor. The other thing I'm going to say too is it doesn't always happen in this order. And Craig, I know that you can verify that too. But the most important thing that you want to do so that your realtor knows that you're serious is you want to be pre-approved. You want to be pre-approved by somebody who has experience. You want to be pre-approved by people who are local, who you can go see, people who have, I'm going to say it a bunch of times, who have a lot of experience. It's just a really, really important thing to do. So you've got your pre-approval, you know what kind of a sales price is going to fit in your budget. I'm ready to go. I want to get out and I want to look at homes. So the next thing that you want to do is you really want to, you need to look for that realtor. What should I be looking for? Well, you want somebody that has experience in the market that you're wanting to live in. They should be able to talk to you about, even if you just take the context of Bakersfield itself, there's so many different parts of town and they all have their attractive parts about them, the good things, their strengths, their weaknesses, all of that. Your realtor should be able to educate you about that part of town that you want to live in. They should be able to listen to you, to analyze what are you wanting, what are your needs. I'm a single person. I just got out of college, but I'm getting married next year. And then in 5 years, we're probably going to have some kids. Those are the things that you want to talk to them about. You want them to hear that because they are going to give you that direction looking at your future as far as that goes. They're going to show you homes that fit your criteria. I'm going to circle back to that pre-approval. That's where we have talked about what fits in your budget. What we want to do is make sure that when you come out of that pre-approval process, you know what kind of price range you can purchase in, and then your realtor can help you figure out what criteria you have. Criteria might be, I don't want a big yard. I do want a big yard. I don't want a pool. I do want a pool. There's a lot of different things. Your realtor is that person who's going to be your champion. They're going to be negotiating on your behalf. How much does it cost for me to find a realtor? How much does it cost for me to find somebody like Craig that's going to help me negotiate and find this house that I've been wanting? It doesn't cost you anything as a buyer. Your seller pays for all those fees. What else does a realtor do? They coordinate. They're the juggler in the whole transaction. They coordinate everything. I'm a lender. I just handle one piece. I handle a really big, important piece of this. But your realtor is actually interfacing with all of the other people that are in the transaction. And Craig's going to talk a little bit about that more here coming up. They review all the paperwork. They review all the deadlines, making sure that everybody's staying on in their timeline, that things are happening the way they need to happen throughout the transaction. A really experienced realtor is going to be that person that's seen it all, that's been there. That's why, and again, I'll say it a bunch, and you'll probably hear it from Craig too. That experienced person can help solve any problems that arise. And I know I'm not trying to sound scary or anything like that, but the other part of it is there's always something. There's always a hurdle in every transaction. That's why you want to be with experienced people, so that they can help you through those hurdles and give you options as far as that goes. And most importantly, and this is huge, you want that person that's going to be available to take your calls, your texts, and your emails. So at this point, what I'd like to do is turn this over to my partner, Craig. One of the reasons he's here with us tonight is because Craig works with the Valley Strong Credit Union as a preferred realtor, and we have a real estate service that offers more benefits to you as a home purchaser. That's why he's here with us tonight. He is an experienced individual who we have had many transactions with, very successful. And Craig, I'm gonna let you take it away.
Okay, all right. Well, I want to thank everybody again for taking the time to sit down with us tonight and find out what purchasing a home in this current market that we're in is all about. Going back with finding a realtor, by far the most important thing is going to be experience. You want somebody that lives and breathes this business. You don't want someone to learn the business on your dime. Everybody has a family member, a cousin's friend, friend of a friend of somebody that they know that is a realtor, and you have to be very, very careful in maneuvering that way. I'm guessing that for most everyone that's part of this tonight, that this would be the largest financial step that you've ever taken, and you can't lose. It's not even an option. So you definitely want someone that has experience, that's well respected in the community, that knows the community well, that knows what our market's doing on a daily basis. There are a lot of people in the business that are in the business part-time, and they don't do it every day, and close a lot of deals with people that are in the business part-time. But again, you want to find that experienced individual that is going to fight for you and your family. Okay, so after a client reaches out to me and wants to get started, they just got their approval letter from Valley Strong, and they give me a call and ask, what do we do? How do we get started? What do we do? What's the first step? And what I always tell my clients is to sit down with their family and make a plan. What's important to you in a home? Is a 2-story okay? Do you want a pool or not? Proximity to the schools, so the kids don't have to change schools. Are we going to search in a certain school district or specific school close to work? So sit down as a family and talk about all those things, about what's most important. And again, back to what Robin had said about, the family's budget. You don't want to get yourself outside of your comfort zone when it comes to that. Be strict with yourself. You don't want to take steps backwards. You don't want to go look at $500,000 and $600,000 homes, even though you quite qualify for it. But your comfort zone is in the 225 to 250 range. You don't want to put yourself or your family in that situation. But you just want to educate yourself on the specific comfort zone and price range that you're looking for. So after you put together your wants and needs and let me know, I input all that information into MLS, which is a multiple listing service, which is a service that I subscribe to that provides me all of the active, pending, sold, back on the market, price changes. I get all of the activity on our local market instantaneously as those things happen and occur. Zillow, Trulia, Redfin, those are all sources that people lean on because they're free and there's a lot of information there. But the biggest problem is they're not updated like they should be, to put yourself in the front of the competition, which we have a crazy market right now. The inventory is extremely low for the number of people that are purchasing. So having that pre-approval letter in place and being educated on the market that you're coming into is going to make you very, very successful in finding a home. So once we start looking at homes and we identify a handful of them, you're going to purchase one of these 3, 4, or 5 properties. I'll put together what's called a comparative market analysis, which breaks the house down in the neighborhood. I try to keep as tight a radius as I possibly can. I started a 1/4 mile, and hopefully there's enough comparables there that we can come up with a true market value from a price per square foot basis on what the neighborhood and the area is doing. If there aren't enough comps to come up with that value, I stretch it out to a 1/2 mile, and until I can pull the comparables together to come up with the true value, which will allow you as a buyer to make an educated choice on what that offered price should be. So we're not just trying to snag a number out of the sky to see what happens, because on top of the realtor's advice and the CMA and the study of the buyers, the lender, Valley Strong, they're going to send an appraiser, and the information that I provide in the comparative market analysis is identical. It is exactly the same information that the appraisers look at to justify and determine value for the bank. So I take that information, put it directly into your hands, and we just go from there to put the market analysis together to make an educated offer. Next slide, please. The offer itself, once we've chosen the one, we found the house, this is it, let's do this. We put a formal offer together based on our study of the CMA to determine the value. Contingencies and conditions of an offer. I always make my offers contingent upon the buyer's inspections. The standard time frame for that in California Association of Realtors purchase contracts is 17 days. It can be made to be more days. It can be made to be less, but the standard time frame is 17 days from acceptance to do any and all inspections that the buyer would like to do at their expense. What I do, one of the first things I do once getting an offer accepted is we order a home inspection right away, the very first thing. And then after the home inspection, they might determine or find evidence of, possibly there would be termites or some plumbing issues. And I wait until that home inspection is done before we start to send other contractors and inspectors out to kind of follow up on what the home inspectors have seen. And then conditions that of the purchase contract. There's going to be at the very, very end of the transaction, within 5 days of closing escrow, a final walkthrough. And again, part of the purpose of that walkthrough is to make sure that the property is in the same condition it was in when the offer was made. A lot of times, this time of year especially, in our hot, Bakersfield heat, people will turn the sprinklers off. And the water, just in a day or two, the grass and plants can be history. So swimming pools, and then just general maintenance of the property. So, we do that walkthrough at the very, very end to ease the buyer's mind and getting to the end to sign the final loan paperwork. Presenting the offer to the seller's agent. I usually give my offers 2 to 3 days. Always put an expiration date on them that they're not good indefinitely. Again, in this market, if you find a seller dragging their feet, not wanting to look at any offers for a week to 10 days after it was listed, you're as the buyer in the driver's seat and calling the shots. And, you're more than welcome to wait that time if you choose to. But if you choose to go after, your second, property on your list, then that's what we would do. But you always want to get the offers to the agents as quickly as possible, and also expect a response from the seller's brokers in a timely manner. Following up with the listing agent regarding the acceptance, counter, or decline of an offer. After the offer is made and submitted to the selling agent, we hope and pray we get it accepted the way that it was written. Oftentimes that does happen, but we also sometimes get counter offers where they say they won't take $245,000, they'll take $247,500, and then maybe split the cost of a home warranty or whatever the case may be. And the last thing that happens sometimes, and especially in a multiple offer situation where there's a lot of offers, not all the offers would even be countered. So sometimes you'll get an offer declined where there were just too many offers that didn't warrant writing a counter offer. It's rare, but that does happen as well. Something I want to add to in making an offer, we talked about, and there were some questions about closing costs and how much money to have in place. And it's very, very common to get the seller to participate and pay seller's closing costs. And different financing, depending on the financing that you get, or I should say the financing that's best for you and your family, they have different guidelines and rules as to how much. But kind of the common number that I see is people looking and asking for up to 3% of the purchase price towards closing costs to be paid by the seller. And in addition to that, a home warranty that usually runs anywhere from $500 to $600, sometimes more if there's a swimming pool. Next slide, please. And then we do the happy dance as we got our offer accepted. And I get the pleasure of calling you on the telephone and sharing the great news that the offer has been accepted. And then, basically now it's time to go to work. This was the goal, to find a property and put it in escrow. And now it's time to really get to work. So the very first thing that's done is I get the fully executed purchase contract to Valley Strong and the loan officers there. They coordinate with the other parties that they work with on the financing side in getting the appraisal ordered. They get tired of me calling them, bugging them. Is the appraisal ordered? Is the appraisal ordered? So I'm always jumping up and down on that once we get a new deal together. But the escrow and title department, they once the escrow is formally opened, the escrow is just a neutral third party that work for both the buyer and seller. They help coordinate things between both buyer and seller, and also work with the lender on the loan to get everything in place to get it to closing, and handle the title insurance aspect there as well. The loan application is formally signed and sent for loan approval. And we're off and running, waiting for the appraisal at that time. I keep a real close eye on the progress, and work with the seller's agent to make sure that all the contract conditions are being made, and back to the contingencies again, scheduling the appraisal, scheduling the home inspection, termite inspections, making sure contractors are able to get in and out, and those reports are being received and sent back and put in the buyer's hands in a timely manner, to be sure we meet.
Craig,
Yeah.
I just want to jump in here for a second. I have a question. You know, you were talking about appraisal, and I know as a lender, that's something that is important for us to get ordered right away. But what happens if that appraisal doesn't come in at the purchase price that you're in contract for? What do you do as a realtor?
Very, very similar to with what happens with our offer. Normally what happens is nobody wants to pay more than appraised value, which is where, we really want to study the CMAs to know what that true market value is. Unfortunately, there are a lot of homes on the market in Bakersfield that are overpriced. They will never appraise for what they are on the market for. And there's a lot of those out there where the realtors are not doing their homework to know what the true market value of that property is. And it's unfortunate and frustrating at times when clients call and are interested in a house that you pull the comps on it, and there's no way it's going to work. But what happens is either the seller lowers their price to that appraised value, the buyer and seller meet somewhere in between to make it go, meaning the buyer would have to come in with cash on top of that appraised value to a level that would be acceptable to the seller to do the deal. Or in rare occasions, the deal is just dead altogether and the buyers choose to go find another property.
Good deal.
But, it's rare, but it does happen. After all the contract conditions and contingencies are met and going strong, Valley Strong sends the final loan documents to escrow, which are there for the seller or the buyer to buyer, and the seller signs final paperwork as well, but the buyers go to sign. We call those a loan docs. It's done just days before the formal close of escrow. You'll sign a lot of paperwork to finalize the financing. And then escrow company at that time, they balance the escrow and are able to tell you exactly the funds and the amount of money that they're going to need to close the transaction. So clients can either buyers can make a wire transfer or pick up a cashier's check to take to the escrow company. And then, as I spoke of before, just days before the close of escrow, we schedule a final inspection and walk through again, is just to make sure the house is in the same condition it was in when the offer was made. The stove that was there is not a different stove, or maybe the stove's gone altogether. But you just want to be sure the house is in the condition you expect it to be in when the escrow is closed. Sometimes after the home inspection is done, there's some work requirements that are done, and we get those verifications that the work is done, but a lot of times we don't get to physically see those items are done until that final inspection. So that's a good time to go and check those items off the list. So after both buyer and seller, everybody's ready to close. All the questions have been answered, boxes have been checked, that loan is in place. Valley Strong wires the money to escrow for the new loan, for the buyer's new loan. And once escrow receives those funds from Valley Strong, they release the deed to the Kern County Recorder's Office, or whichever county you live in, to the Recorder's Office to be recorded. And once that deed is recorded, that is when you hear the term escrow closed, that is what takes place to formally make the escrow closed, is the fact that that deed has indeed recorded in the new buyer's name. And at that time, you're officially a homeowner. And I, again, look forward to making that call to say that that we're done, and look forward to getting the keys to the buyers to their new home. That's, I'll pass it back to you, Robin.
All right, thanks. Thank you. Okay, next screen. Oh, and here's pass it back to me. Here's Craig.
Oh.
This is Craig's information, and if you guys want to reach out to him, this is where you can reach him. This is his website. And next screen. So this is a time where we want to listen to more questions. We want to hear what you guys have to say. Both Craig and I are here. And Jaime, I'm going to turn this over to you to see what kind of questions we can answer.
Thank you, Robin. But before we start with the questions, I heard that you have some great news for everyone who's tuned in today.
Oh, thank you. Yes, I do. And I almost forgot, and I want to make sure that I pass it along. In appreciation for you attending this Zoom webinar tonight with regard to home buying, Valley Strong has a promotion for you that we're offering for a limited time. And it is, if you come in, get pre-approved through Valley Strong, get your loan through us, we will decrease your interest rate 0.25% lower than our posted rate that we have to everybody else that's out there in the public, as well as offering you an additional $500 toward your closing costs. So maybe in your offer, you didn't get quite as much money as you needed, then you've got another $500 that you can add. So this is a summertime promotion for us, and in appreciation for you joining us today. Back to you, Jaime. Thank you.
Right. Thank you, Robin. I wanted to make sure that everyone knew about the great news that we had for them. And thank you now for actually sticking around and listening to our webinar. But yes, we have so many questions. So let's just get started. One of the earlier questions that we didn't get to ask was, do I need a pre-approval for a pre-closure or foreclosure property?
I'm going to talk a little bit about that, and then I'll probably hand this off to Craig. Basically, pardon me, when you're purchasing a, it depends on what your offer is to purchase that foreclosure, or maybe a house that has, that has been foreclosed on already and is being, sold on the courthouse steps, as they call it. At that point, they're looking for cash only. If you're looking to purchase a home that is a short sale or in the process of foreclosure, at that point, you do want to have a pre-approval, because that lender is going to want to know that you have the ability to close that escrow unless you're going in with a cash offer. Is that right, Craig? Is that pretty much?
Yeah, on the foreclosure properties, the banks are very, very strict with the guidelines, even more so than on a standard sale. They'll want to see not only an approval letter, but they'll want to see bank statements themselves. They'll want to see that those assets are in the bank. Where is the money coming from? They'll want to see that before they would even consider an offer. So yeah, we most definitely would require the approval letter, as well as be prepared to provide bank statements and where the assets and the monies are coming for to close the deal.
Good deal. Thanks.
All righty. Does the amount of money that you've saved for a down payment have an effect on the amount of the loan that you will qualify for?
It does. And I'm going to kind of circle back to the very beginning about what fits in your budget. And that is all part of that equation. So maybe a $1,500, and this is very hypothetical, but maybe a $1,500 payment is the top end of your budget. That's all that fits there. But you really want that $350,000 house. But maybe that $1,500 payment equals a $250,000 loan. That's the whole importance of going to meet with your mortgage loan officer, going through that pre-approval process so that you can see. So they will look at and calculating that debt to income ratio. And it's all about that balance there. So it does have an effect on it. But that's the whole point of that meeting, is to find that right balance so that you know going forward what you want to be looking at as far as a price range goes.
Okay, and then we got several questions. They're about the same, but it all ties to, is only 1% of the outstanding student loans counted towards the debt to income ratio?
Yes, as long as you are in deferment. If you're actually in repayment of that student loan debt, then we're going to use whatever your payment is, the calculated payment with that lender is. But if your loan is in deferment, we do have to count 1% of the balance. So if you owe $34,000 in student loans, we're going to, when we're calculating that total, that debt to income, we're looking at all of your housing expense and your other expenses. We're going to use 1% of that $34,000, which is $340 in your qualifying.
Okay. And then again, we had a multiple of the same questions. What's the difference between a conventional and an FHA? And then after you answer that, if someone has had an FHA in the past and has paid that off, are they eligible to reapply for another FHA loan?
I'm going to answer that first. And almost what I'm hearing, well, not almost, what I'm hearing from that is a connotation that an FHA loan is for first-time home buyers. One of the things, and that's something that actually I didn't address earlier in this, is I hear that a lot. I'm a first-time home buyer. What are the programs that are out there for me? Technically, there are no first-time home buyer programs any longer. It's kind of a gimmick to get you to call people and say, oh, first-time home buyers, first-time home buyers. What a first-time homebuyer program meant was typically a lower down payment and some down payment assistance. However, down payment assistance programs today are no longer just allocated to a first-time homebuyer. You can be a repetitive purchaser. And so it's kind of how that works there in that connotation. You can have multiple FHA loans. What I will tell you is that at the time that you are purchasing that house and you are obtaining an FHA loan, the Federal Housing Administration is looking for you to make that declaration to them that this will be your primary residence. So if you're looking to just purchase the home and then turn around and go buy another one somewhere else and get another FHA loan, they won't allow that. But you can have that FHA loan for a couple of years and be ready to move up into a bigger home or another area, something like that, and utilize FHA again. But they're going to look for a minimum of a year's time that you have lived in that house as your primary residence. And then going back to the first question that you asked, FHA versus conventional. They're basically the biggest two differences, I'm going to say three. The biggest differences in them are the down payment amount. The down payment with the FHA loan is a lot smaller. It is 3.5% versus the conventional loan, which is 5%. However, and earlier tonight, I talked about mortgage insurance and based on how much you're borrowing against the property, and if you're putting less than 20% down, FHA's foreclosure insurance is quite a bit more expensive than conventional. And with FHA as well as VA, the mortgage insurance that you have stays for the life of the loan. Whereas on a conventional loan, you may have that mortgage insurance, you'll only have it for the time that it takes for your principal balance to get to 80%. The only way to not have that on an FHA or a VA loan is to refinance out of that into a conventional loan. And that's another part of that pre-approval process. Your loan officer is going to put those programs side by side so that you can look at what the pros and the cons are on those.
Okay, and then I'm gonna throw an easy one at you, just to mix it up a little bit. How long after a loan officer gets all the required paperwork does it take to get notified of the status of the application or the approval?
It should be instantaneous.
Okay.
It should be instantaneous, and it should never take longer than 24 hours at worst.
And again, this is after the loan officer has all the paperwork
Yes.
that they need.
Yes, and just going back to saying, be prepared. Bring the things that we talked about. Bring your income. If you don't have it with you, they can't complete that pre-approval process for you. That process is the certification to all the other parties in the transaction that we've really verified what the representations are that are being made.
Okay.
Could I add something to that, Robin, on the letters? Because I drive all the loan officers over there at Valley Strong crazy with the buyers. Now, a lot of people qualify for a substantial amount more than the properties that they're actually looking to purchase, and we would never want to show a seller, if you're making an offer of $240,000, that you qualify for $350,000. So, I'm calling all the time, having new letters sent. And what I like to do is I make my approval letters match the offers. So if we're going to make a $300,000 or a $240,000 offer, then our approval letter is going to be a $240,000 approval letter. A lot of people ask me, or they have some concern that they don't want there to be a big difference in what they're offering. So I know that's a question that probably has been asked, and I just wanted to get that taken care of.
I think it's a really good point. Yep.
Yeah.
Okay, we have another question in regards to credit. For instance, if a married couple applies, does the loan officer look at the best or the worst credit score, or do they use an average of both scores?
That's a good question. Actually, going to go back to regulations and guidelines. The representative FICO score, each person has those three representative scores. Each person is given their representative FICO score. Then we have to take the lowest of the representative scores between the two, and that becomes the representative score for that application.
Okay. Now with COVID and just with what's happening really, employment gaps, how does that affect someone's application right now?
That's another good question. And actually, it's very timely because we are seeing guideline changes all of the time with this. And when I say all the time, sometimes it's on a daily basis, sometimes it's on a weekly basis. My job as a lender is to be able to make sure that you have the ability to repay the loan. So we're going to take a look at everything. We can understand that you've had some lapses. There may be some lapses in work hours, things like that are pandemic related. We're going to look at the type of industry that you're working in. We're going to look at the feasibility that is it possible or is it feasible that the income that you were receiving prior to the pandemic will be the income that you're going to have in the future. So those are the things that we look at. And it's just really about analysis at that point.
Okay, so let's say someone's found the home and they're in the middle of the whole application. Now, who pays the closing costs?
Well, is going to go right back to that beginning when you're making that offer. That negotiation is done for you by your realtor. And then it is decided upon in that contract between the buyer and the seller who will pay what closing costs.
Mhm.
Okay. Now, Craig, I think we left you out for a little bit, so I
Okay.
have some questions for you
Go.
too.
Okay.
Is it a good idea to use a realtor if you're buying new construction?
Most definitely.
Absolutely.
Most definitely.
Yeah.
Yeah, you want to have some representation there. One of the things that happens is most of your new construction and local builders, they have their own financing, and they push really hard to get you to use their financing. And believe me, they're not giving anything away. As a matter of fact, Robin and I just closed a transaction on new construction a couple of days ago, where our buyer was being pushed hard into financing that made him very uncomfortable, and we were able to bring those cost sheets from that local lender to Valley Strong, and Valley Strong was able to, to beat it so by so much. When it got back to the builder's lender, they said, we can't compete with this. There's just no way we can compete. And make a long story short, we closed the transaction with Valley Strong on that new construction. So not just from a financing perspective, but also negotiation. There are things that the builders will and will not do. Falls back to, again, choosing a realtor that has the experience with the builders and knowing what they will and will not do for their buyers. So I most definitely think you should be represented by a realtor in purchasing new construction.
Do other needed professionals include building inspectors? And then do you recommend finding your own building inspector?
When we do, each and every property has its own story, depending on the age, and maybe it's been altered, some modifications, whether they were permitted or not. Again, we always have a home inspection done on a property, which is a contractor. They climb in the attics and check the plumbing and do go all the places I would never go. I'm too chicken to jump into underneath the house. But they check everything out and give us a very detailed report and give us the ideas of where to proceed if there's findings there that would require other inspectors. But as far as permits and everything, it's never a bad idea to pull permits on a property that you're going to purchase, just to make sure any alterations or anything that's been done to the property were done with the proper permits. But as far as building inspection is concerned, I don't think it necessarily be necessary to hire an actual building inspector. I mean, you have a professional home inspector, you have an appraiser. These guys are out, know all the permits, rules, and guidelines. As far as even as an example with the home inspector, something we see very often in Bakersfield, because the guidelines have changed over time with earthquake safety and so on. A lot of our hot water heaters have the wrong plumbing on them. They have to be strapped for earthquake safety. And these guys are very well trained, do it on a daily basis, and know exactly what to look for. So I think that answers that question.
Okay. Now, someone is asking, if the bank is only lending up to the appraised amount, and let's say the appraised amount is less than the selling price, does the buyer have to pay the difference in cash to the seller?
Well, that's part of it. And Craig, you can jump in on this if you want, but this is part about what we were talking about earlier. And I think I even kind of jumped in to what Craig was talking about and asked and said, well, what happens if that appraisal comes in lower? That's where, and Craig, I'm actually just going to let you take this. It's part of that whole negotiation part.
Yeah, it just, you have an agreed upon purchase price with the seller, and the appraisal happens after that's been agreed to, and it can take anywhere from you know, a week to 2 weeks to get that appraisal back to find out what the number is. But and to answer the question, yes, when it comes in short, the options are one of three. Either the seller sells the property at that appraised value, the buyer and seller agree to meet somewhere in between, which would require cash from the seller or the buyer, excuse me, on top of the loan that the lender will only give them the loan for. So, and then the third and final option is that the deal is off and buyer and seller part ways and buyer finds another property. But yeah, the lenders will only lend on that appraised value.
Right.
Now, let's say it's the other way around. Let's say, for example, someone's pre-approved for 300,000. They buy something that's only 240,000. Can they use that extra 60 for remodeling?
No, not in a purchase transaction. That was really cut and dry, but that's really the answer. No. Sorry. we don't offer from a lending standpoint, or from my side of the desk, the value or calculating the loan to value, which has to do with all of our guidelines, is based upon the loan amount that we're going to make is based upon the lower of the sales price or the appraised value. That then becomes the value for that transaction. We do not lend above that amount.
Going back to the student loans, we're getting tons of questions on student loans. Someone mentions a student loan forgiveness program is not quite the same as a deferment. Can you kind of clarify that a little more?
Well, it varies from district to district, from state to state. If there is a forgiveness program, it has to be well documented. If there is, I was going to try and maybe figure out another way around that, but quite frankly, regardless of forgiveness, we still have to count that 1%. If the loan is not in repayment at this time, then there has to be, we have to utilize 1% of that balance in qualifying.
Now, if someone uses money for a down payment, how much of it can they write off for tax purposes?
That's actually a tax preparer question, but to my knowledge, there is no write-off against down payment.
Okay. Now, what other fees are included when purchasing a home besides the down payment?
That's a good question. There are a lot of fees involved because there's a lot of parties involved in the transaction. You will have lender fees that we have at Valley Strong. We have discount points. We have other processing fees. We have a fee for your credit report. We have a fee for your appraisal. We have a fee for, let me see, tax service contract. I'm kind of, I'm going down in my mind trying to think of what those fees are. The other fees that are involved, which are the fees that you're going to get an estimation of at the beginning when you're getting that pre-approval and meeting with that loan officer, are what would the typical fees be for the other parties that are involved. And that would be your escrow company, your title company. They have a bunch of different fees that they offer, and they're all based on whatever the price of the projected price of the house is at that time. So there's a lot of fees there. That's another thing that you want to make sure is that when somebody is giving you a cost estimate, that they're outlining all of the fees that are in the transaction. Very often I see when people come into me and they have a quote from another lender, well, they said my closing costs are only going to be this. Well, I'm sorry, Mrs. Smith, they left out all the escrow and title fees. Those are real fees. Those are fees in this transaction. We want to be as clear and transparent with you as we can about what you're walking into.
If I could add to that, Robin, I'm one of the things that is just golden for me as a real estate professional with my clients and working with Valley Strong is so many other lenders in town. They only tell you about the principal and interest cost of a loan.
Good point. Yeah.
And it's all that they will disclose to potential homeowner. And that Valley Strong, none of those fees are pulled back or hidden from the buyers or potential homeowners. It's unbelievable what some of the other companies in town do when it comes to that, in just disclaiming to someone what the principal and interest is. And then when you get to the time to sign the paperwork, they say, well, everybody knows you have taxes and insurance. And what we call that in the business is PITI, principal, interest, taxes, and insurance. And whenever you're talking to anyone about financing a home, you always want to know that you're being quoted that principal, interest, taxes, and insurance. But again, falling back on my experience with Valley Strong is that knowing that people are being quoted those numbers that are realistic, and there aren't going to be any surprises. And back to the closing costs, again, falling back to a realtor with experience of what those costs consist of. There's escrow fees, title fees, the list goes on that side. And that's where having a real estate professional that is very, very experienced in negotiating and maneuvering around making those things happen for buyers is very, very important. It's very, very common in town to ask or need. It's much easier for people to save the money for a down payment to purchase a home. The closing cost seems to be the biggest hurdle for most buyers, is getting there. And again, having someone that can negotiate those costs and fees for you on your behalf is very, very important.
Now, are you seeing more people putting in more offers now compared to pre-COVID, or less?
The market, just with COVID, I mean, it's hard to say, because the timing of when our governor, put a halt to all things business in our community, and I guess across the state, but in our community, especially real estate, was in the heart of the home buying season. Everybody was geared up and ready to go, and then we got the rug yanked out from under us. And we already had an inventory problem prior to the pandemic, but the pandemic coming and a lot of people had more time on their hands wanting to look. A lot of houses that people got nervous about COVID and having people in their homes. A lot of properties were taken off the market for sale. But things have calmed down. In the very, very beginning, it was kind of wild, but we are just in an inventory shortage, and were before the pandemic. But most definitely a hot market in terms of being prepared as a buyer. We're very short on inventory right now.
This is more just on paperwork. In general, what's the difference between a deed of trust and a grant deed?
That's a good question. Actually, the deed of trust is actually a form that you sign that is a notification that is filed at the county recorder that states that you owe me money. That you owe Valley Strong money for a mortgage that they made against that property. And so that deed of trust actually spells out the terms that you owe to Valley Strong, or any lender for that fact. And it is also specifies the exact property that that loan is made on. A grant deed is actually a conveyance of title, meaning that the seller is now transferring their title in that home to you, the new buyer.
Okay, and then what is explain what a broker does, and then what an underwriter does.
Okay, I'll talk about an underwriter, and then I'll let Craig pick up the broker part as far as that goes. An underwriter is a person within our home loan center who actually takes all of that information that is gathered from pre-approval process on through, reviews that appraisal, reviews the purchase contract, reviews the credit again, all of the same things that the mortgage loan officer was looking at in the beginning, but then all of the other things that are added into that application to complete that transaction and makes the final assessment and commitment on behalf of the lender or the credit union, as far as we're concerned, that it is certifying that the property meets our guidelines, our minimum property standards, that we have established that you as a purchaser have the ability to repay this loan. And that's based on your income, your assets, and your credit. And they make that final determination and sign that off. And that was really in a nutshell what they do, but it's a complete analysis of everything in the application.
On the real estate brokerage side, on a home loan purchase, you'd have two sides. You'd have a broker representing the buyer, who is under contract to negotiate on that buyer's behalf to find a property, and once again the property's been identified, to help see it to the end, and also cooperate with other brokers and local realtors to achieve that goal. From a brokerage standpoint and representation of a seller, when you take a listing for a seller, you're agreeing to market that property through multiple listing service, the internet. The list goes on now with all the places that we market property. But as a brokerage, that agreement between the seller and the broker is that you'll cooperate with the other brokers in the area and sometimes out of the area that might come to town or bring buyers to town, and making that property available to all of the other brokers. We're all members of a local organization called the Bakersfield Association of Realtors, where we all share our listings. We all know what each other have listed for sale. We all keep the comparables updated when a property is sold. We input that information, and it just helps everyone stay educated on what the market's doing. So as far from a brokerage standpoint, that's what we do in representing both seller and buyer sides, in a summary.
We had a viewer kind of compliment the presentation. They really like the information that you're providing. They want to know, however, does this also apply to investment mortgages? They're looking into buying possibly like rentals, and they want to know if they look for the same kind of things as they would if they were buying a personal purchase.
That's a really good question. And I'm going to tell you, it's exactly the same. It's all of the things, the fundamentals that we were talking about today, all of the things that are important. It doesn't matter what type of property, if it's a primary residence or an investment property, it is all the same.
If I can add to that, Robin's exactly right that they're all the same. But what I tell all of my clients is they're all investment properties too. Even for these people that are purchasing for their own, primary residence, for the kids to play in the backyard. Those of you that are paying rent right now, you're paying someone else's mortgage off. They're receiving the benefit. You have a place to live, but they're receiving the financial gain. And by purchasing a home, it's an investment also. And again, it's paramount that you have someone that knows the local market, that can put the numbers in your hand, that are you'll be able to make an educated purchase and smart about what you're doing, because it's also an investment for our people getting an FHA loan, which are owner-occupied only financing. So, but from an investor standpoint, we do a lot of investment business in our office with different investors that are looking to purchase and sell, and the numbers are always important to both sides, but just having those CMAs and knowing exactly what that market's done, maybe might even be a little more important to see what that market's done the last few years rather than the last 6 months to a year. What has it done the last 2 or 3 years? What is the trend that's happening in the neighborhood versus other properties that might be of interest? So it's just comes down to education. That's what it's about.
Good point.
How does the buying process differ from purchasing homes out of state?
I'm not sure that I know how to answer that, to be really honest with you. What I can tell you is that Valley Strong Credit Union is geographically bound to the state of California. Each state has their own real estate oversight, their own lending oversight. So so things vary from state to state. So it's actually a pretty tough question to answer, and I don't know that I could give you a great response on that.
In the last year to year and a half, I've had a lot of sellers leaving Bakersfield and leaving California altogether, and have been able to help from a brokerage standpoint as a realtor to be able to help represent, negotiate for them as far as the contracts. Things are done completely differently on the East Coast than they're done here. And so you just, again, you if you don't have people that you know or trust or have the experience that you're looking for, don't be afraid to have someone represent you from Bakersfield or your hometown or wherever, someone that you're comfortable with that can just help be part of the transaction in from afar. It's not, with today's world, with modern technology, purchase contracts, I was looking at some today from the state of Tennessee for an investor that's looking at property there. So don't be afraid if you do have a local professional that you trust to help you out if you're doing any business out of state.
What is the credit score required to be pre-approved or to be approved for a home loan?
620.
Okay.
Yeah.
Now, one thing I kind of just want to wrap this up. Thank you everyone again for all of your questions. Robin, can you do a quick recap on the special that you're running for all of our viewers today? Sure.
Thanks, Jaime. Thanks for bringing that up. So basically, for a limited time, we are offering you as in appreciation for attending this webinar tonight and this Zoom presentation on behalf of Valley Strong Credit Union. We are offering you 0.25% lower on your interest rate. We will decrease your interest rate by 0.25%, 0.25%, and offer you $500 toward your closing costs in your sale transaction.
And how long is this good for? Is there like a limited time offer, or?
Right now, we're just calling it through summer. So we haven't made any determination if it will be long lasting, and it would be appropriate to say this would go up until November 1st.
And how can people apply?
You can apply online or you can call our home loan center. That information is going to be at the end of the presentation here. And if you apply online, you can, my team, my loan officers will be in contact with you, usually within the first 24 hours to make sure that we're moving things in the right direction for you.
Right, thank you very much. And Craig, can you again please let us give us your contact information if anyone needs to contact you? How can they reach you?
I'd be happy to answer any questions. If anybody wants to reach out to me directly, my cell phone number, area code 661-703-4223, and my email address is Craig, CRAIG, at McMahon, MCMAHON, realestate.net. So Craig at McMahonrealestate.net. I'd be happy to answer any questions anybody has in regards to the real estate side of things.
All right, well, thank you again for joining us this evening. We hope that you enjoyed the content and that you leave feeling prepared to purchase or refinance your home. After we end the meeting, you will be presented with a link to take a short survey regarding today's webinar. Again, we had tons of questions. Thank you for submitting those. If your question wasn't answered, please go ahead and send that to us again, and we will contact you directly and answer that for you. Just to be sure, make sure that you include your contact information, and then that way we can get someone to contact you. We will be sending a follow-up email after the webinar that will include several resources mentioned in tonight's presentation. So look out for that in your mailbox. On behalf of Robin, Craig, and Valley Strong Credit Union, thank you and have a great night.